Bottom line here is that there's no new sense of urgency from these minutes that the FOMC is on the verge of a rate hike in March. The committee did acknowledge that there's slowly growing pressure for a rate hike, but I'll read a quick excerpt or two from the minutes. Many participants expressed the view that it might be appropriate to raise the federal funds rate again fairly soon if incoming information on the labor market and inflation was in line with expectations. But that was soon after followed in the minutes by this. Many members continued to see only a modest risk of a scenario in which the unemployment rate would substantially undershoot its longer-run normal level and inflation pressures would increase significantly. So I think the takeaway at the top is that they acknowledge they're getting closer. Rate increases will be coming fairly soon, but I don't get a message that not hiking in March would constitute a policy error in the minds of many members of this committee. Now, there's a lot of back and forth between hawks and doves. Consumer spending acknowledged is still very strong and expected to be quite strong in 2017. The jobs market quite healthy. Shortages developing in more areas of the labor market. But the inflation data, to the extent that it's improving, seems not to be changing the outlook for members, but rather supporting their existing expectations that inflation is headed slowly back to their 2% goal. There are upside risks acknowledged here, namely in expansionary fiscal policy possibly being on the horizon, downside risks, namely the possibility of further strengthening in the dollar and still the Fed fund rate's proximity to the zero lower bound. And now back to fiscal policy, I think it's worth mentioning the committee spent quite a bit of time talking about the uncertainties of not just fiscal policy, but the whole policy package that we might see under a Trump administration. And I think that's a reference to trade and immigration policies.